Hey guys, what's up? So today we'll be talking about market structure and how you can like put setups on it. So let's go. So what is a market structure? Market structure is basically a set of higher highs, higher lows, or a set of um, lower lows and lower highs. So starting off, let's look at some examples to get it cleared out. So let's go to a clean chart. Let's go to Sol BTC. Right. So here I went to the weekly chart here. Let's observe some structure. So you guys can see here price went to low. Price made a lower low here, right? So here's a low. Price went up here. So here we have a lower high. This is called a lower low and a lower high because we're in a downtrend, as you guys can see. Similarly, this will also be a lower low. This will also be a lower high, right? Same here. You guys could say that here too, and here as well. So, or a set of lower lows, lower highs. So this market is trending downwards, as you guys can see. So the opposite here. So here the market is making higher highs and high lows. I'm just counting this as one so that it's easy to understand. So higher high, this wick, high low, this wick. Right. Similarly, here, 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 and then, like whatever. You guys got it, right? So, and then hopefully right now we get a higher high here. Hopefully, let's see. Right. So moving on. Let's get into it. So these high highs and high lows, once you map these out, once you can like look at what these are actually, it gets easier to understand like where support is and where resistance lies. So this helps to tell where support and resistance areas lie, and it's also that these wherever these lower lows, lower highs, or high lows lie, if they lie in confluence with some support and resistance area, that's very good. That means there is support and resistance there in that area, right? So these points of higher lows, higher highs, whatever, should be pretty obvious. This market structure is pretty obvious. Like it should take you like 2 seconds to tell this is in a downtrend, and it should take you like 10 seconds to tell what is the higher high, what's the higher low. Like pretty easy to like tell, right? These structures should be clearly visible to you, right? So the biggest misconception that people have is that for example, there is a trending market which is trending upwards, which is bullish on the weekly time frame. Yeah, this is the weekly time frame. So you guys can see this is trending upwards, right? Now if I want to point out something, let's say when the price here, this area was going down to make a higher low, on the lower time frames you would see price go like this. So for example, this is the weekly. So on the daily time frame, on the, let's say the 4 hourly daily time frame, you would see this is going down, this is also going down, but in this manner, right? But eventually the higher time frame shows you that price is eventually going to go up because it's in an uptrend, right? So this is the biggest misconception that people think if the weekly time frame is in an uptrend, the 4 hour of the daily time frame must also be in an uptrend, right? But that is not the case, as you can see here, right? So yeah, Now, talking about these higher lows and higher highs or whatever, it is more important that you guys understand that the significance of these levels, the significance of these higher lows or whatever, increases by how much of a move they produce. So, for example, this high produced a huge move. That means it's significant. But if some higher high or some higher low only produced a move that was like this big, this is significant but not as significant as this, right? So yeah. Moving on. So this market structure offers you three types of setups, right? So let's get into them. So first I'm gonna tell you guys how you guys can identify market structure break. So the whole premise of market structure setups lies on this, right? So here let me present this. So yeah, so as you guys can see here, price is going down, right? It's making lower highs and lower lows, lower low, lower high. But what happens suddenly? Price does not make a lower low, so I'm going to put a cross here on lower low. It does not make a lower low, right? But instead what price does is it makes a new higher high. What price does is in a downtrend, price makes a new higher high. This tells you, oh shit, there was market structure here. From here to here there was market structure, but then market structure broke because it was in a downtrend. Now something happened, something clicked, and it went up. So now we form a higher high here. So this is what you call a market structure break. The other way around, same thing. Price is in an uptrend. Price fails to make a higher high. So we have a higher high here, but price fails to make a higher high here. What happens then is we kind of feel like, okay, now this is weird. It didn't make a higher high. That means there's something different. That means market structure is likely to break, and see what happens. Price breaks the higher low and breaks market structure. So basically, as you guys can see here, it broke the lower high here and the higher low here, right? So that means one second, sorry. So if price breaks a lower high or a higher low after not forming a lower low or a lower high or a higher high, that means that market structure has been broken, right? That means that things are going to change, etc., right? So for me personally, what's happening at the lows is less relevant. I want to know what's happening at the highs, which is important. Here, same thing. I don't really care what's happening here, but I really care what's happening here. This is more important, right? Moving on. So let's get into the setups properly now. Number one, continuation from market structure level, right? So here, same thing which we saw here. Price is going down, price is in a downtrend. It makes a lower high. This is a lower low. Then price fails to make a lower low and breaks this lower high and then forms a higher high, right? Here, what then you'd be like, oh, market structure is broken. This is potentially bullish. So now what do? You wait for a retest of this high, this lower high, to take a long trade. And that straight goes up, right? You're gonna buy here, sell at the next resistance, which should be up there, right? Same thing here. So the setup one is called continuation from market structure level. Just repeating this again. So bearish market structure break plus retest, right? Price is an uptrend, it's making higher highs. This is a higher low. What price does is it breaks this higher low and goes below, right? Now you're like, oh, market structure has shifted. Now I'm going to potentially short this. So now then you wait for your entry, which comes to here, and you short it. For invalidation points, these will be very far away. So for example, if you have this area, take a long here, your validation point would be here. This would be a stop loss, like below here, below this low. Same thing here, it would be so above this. So RR is not great here, right? So this is why, if you guys do not like this setup, then I would recommend you the second setup, which is here. Continuation from pullback, right? So what happens here is price is in a downtrend here. Price, this is a lower low, this is a lower high. So what price does is fails to form a lower low, breaks the lower high, forms a higher high, comes down. So in the first setup we saw that it retested on the lower high, but in the second setup what's happening is it's going below this area, below the retest area. It's actually going to pull back somewhere deeper, and then it's going to go up, right? But your idea isn't invalidated until it goes below this, right? So if you're looking to buy here, I would suggest that you find some kind of support here, some support line or whatever here. If there isn't, what you want to do is you want to wait for price to get above this area again, retest this, and then go up. Don't buy here, buy on the retest of this level again after this has happened, right? That's when you want to get in. That's when I would get in. If you guys cannot find a support or reason to buy here, wait for it to confirm the setup, retest it, and then straight go up. That's what you want. Same thing on the bearish part of this. Same thing. We're in an uptrending market. This is a higher high. This is a higher low. Fails to form a higher high. Right. Fails to form a higher high. Goes below this low. You're like, oh, market structure has shifted. It's not an uptrend anymore. Wait for it to pull back. If you cannot find a reason or cannot find resistance here, same thing, just wait for it to retest this and then go down. Do not this can also be example of knife catching. If there is no resistance here or no support here, just wait for it to come up above this and then go. Come above it, retest it, and then go, right? That's the most important part, retest it. Because otherwise, this just basically looks like a head and shoulders pattern type of thing, right? You don't want to buy that. Because, for example, this happens, and this also happens, and then price is here, and then you buy here, and it's just sort of like a head and shoulder. But what you want instead do is buy at the retest of this level, and then it goes up. Yeah. So, moving on to the third setup, which is actually a reversal setup. But before that, I'll just explain what, I'll just give you examples of how you can use the second setup, right? So here, it's a pretty good example. This chart was in a downtrend. You guys can see, right? It was in a downtrend. Now, what price does is, see, it fails to form a lower low here, and what it does, it forms a higher high here, right? Then what you want to do is, you want to wait for a pullback to either retest this, or pull back deeper. But you guys saw what happened, right? It pulled back deeper and then it went up. Here, like I told you guys, if you guys just waited for price to go above this area, retested and then go up, you'd be much safer than buying a pullback here. Because why would you even buy this here? I think that's kind of risky and not the type of trader I am. So I just wait for it to get above this lower high, right? You already have confirmation that this is breaking out. Just wait for a pullback, retest and then go up, right? Same thing on Bitcoin as well. In a downtrend, you guys can see that clearly. Forms a higher high. Does not completely pull back to this area, as you guys can see. Quickly retest this, and then straight goes up. Some market structure break, as you guys can clearly see. But here, the main catch is that it failed to show that it did not form a lower. So this, look at this, and then look at this. Look at the bottom part. It does not look like this. So that's why I told you guys that for me personally, what's happening at the lows is less relevant. What's happening at the lows is less relevant, and what's happening here is more relevant. So yeah. Now the third type of setup is called a reversal setup, which is where this completely fails. Oh, you guys can see it. Let me just see. Let me just find the setup here. Yeah, you guys can see this setup here. So, you guys, we were in a downtrend. Let me just get rid of these lines. So, we were in a downtrend. We were in a downtrend, right? So, now what happens is price breaks this, goes above, forms a higher high, right? Forms a higher high. Price pulls back into here, and then you guys would think, oh no, it's gonna go up. Let's wait. Like I said, let's wait for a pullback and retest and then long it. So that's what you guys would do here. You guys would wait for the pullback, then long it here. But what actually ended up happening is it went down, and it broke it broke this low, right? So the price actually reversed. It went back deeper. But instead of pulling back here and then going up, price actually pulled back all the way below these lows. When this happens, when a market structure break fails, it tends to go the opposite way very fast and very quick, and then it's usually a very outsized move. It's usually a very outsized move. So as you guys can see here, after this market structure break, this failed. After the down, this failed. Price actually went down like crazy. Like once it broke these lows, retested it, and I think it went down like 30% or fucking 40%, whatever. 30%, yeah, exactly. So yeah, that is what a reversal setup is. Reversal setup. That's the setup number 3. Of course, here you guys, this is not a setup you would only use market structure for. You could, but you have more chances of this working out if you guys use things like support resistance lines, hull indicators, daily opens and stuff like that. So you'd have like more chance of getting these trades right. So yeah, that's it guys. Thanks for watching.